Good morning, everyone. Great. Okay. So, my job here is to introduce CA Padmanabha Acharya, the keynote speaker. I think it's not a good use of time to introduce CA Padmanabha Acharya because he's our own Paddy. Everybody knows. His name speaks for itself. But as a protocol, let me introduce him. CA Padmanabha Acharya, Paddy is the president of Indian Business and Professional Group, Abu Dhabi. He's also audit partner and leads the audit assurance practice for Deloitte in the United Arab Emirates. He has over 25 years of professional experience across the region, particularly in India, Oman, Qatar, and UAE. His extensive audit and advisory experience draws from several variety of clients, including national and multinational enterprises, in telecommunication, energy, resource, and manufacturing. His energy and resource experience covers upstream and downstream, oil and gas, marine transport, nuclear, and renewable energy sectors. Paddy has also been involved in significant advisory engagements, including activity-based costing studies, internal controls over financial reporting, IFRS conversions. So, ladies and gentlemen, join me welcoming CA Padmanabha Acharya to the stage.
So at the outset, I would like to thank Chairman of the Chapter, CA John, and the entire committee for inviting me today. As a part of my keynote address, I'll basically cover, three broad topics. One is in terms of the IASB, IFRS as an organization, what it's currently working on. That's the pipeline and the broad agenda. Then the second topic is 2022. This particular year, what has come up, what's important for all of you to know, and 2023 is just a few months away. So what's coming up in 2023? So I'm aware that as a part of today's discussion, we have other speakers who will be covering some topics in greater detail. So I'll just have a placeholder when it comes to a few things like IFRS 17, which I'm sure Alok ji will do great justice. And also Ravi is going to cover certain topics. My good colleague here, Yusuf, I told him that I might have a joke at his expense, but let's see how that one goes. Okay. So let me just broadly speak about, the IFRS Foundation. What is IFRS Foundation? It's a not-for-profit organization. And in the last 12 months, it underwent some changes. So you all need to be aware what's happening there. Broadly, this is a standard setting body. Okay. So far, till last year, it was responsible for financial and reporting standards. So you have IFRS. They issued 41 ISs, 17 IFRSs, 33 SICs, and 23 IFRICs, and 5 pronouncements. Okay, this is broadly what they issued. In November 2021, due to the requests of G20 nations, the renewed interest in sustainability, they said, this International Accounting Standards Board will have pronouncements in terms of financial reporting standards, but when it comes to the topic of sustainability, given the importance of ESG, you must have heard this term quite a lot, the environment, governance, so the societal impact. So when it comes to ESG, they said let's constitute a separate body, International Sustainability Standards Board, ISSB, and that body will take into account all the standards relating to sustainability. So this has been a key change. In November, they constituted ISSB, and since then, they have started issuing standards exposure drafts as well. So in March of 2022, they issued 2 exposure drafts. Okay, one is a general purpose standard when it comes to sustainability reporting, and we'll get to that. And another one is on climate related changes. Why? Because you're all aware of the changes which are happening in our environment with respect to climate change. With all of those, they felt there's an urgent need to have a standard which discusses climate. So sustainability. If we just go back, I have a small story on sustainability. So I'll take you back to Mahabharata. Do you know how many days the Mahabharata war was? 18 days. Great. So across these 18 days, the king of Tulunad, I speak Tulu. So this king was a neutral king. He decided not to be on the side of Pandavas nor on the side of Kauravas. So he went to Lord Krishna and said, give me a role. Said, cook for the entire armies. Okay. So he was given the task of cooking, but he had to do this in a very sustainable way. Okay. So that's where sustainability comes. And I'll link this later in this presentation. So this gentleman for 18 days had to cook. So he started cooking, and remarkably the food which was cooked was very sustainable, because each day in the battle people died. But remarkably this gentleman knew exactly how many people he had to cater to. When the war ended, there was absolutely no wastage. So Yudhishthira, who is the head of Pandavas, after the war concluded, asked the king of Tulnad, how did you manage? You cooked so sustainably, there was no wastage. He said, there's a small secret. The secret is Krishna. I said, what did Krishna do? He said, look, every day I gave 50 groundnuts to Krishna, and if he gave me 5 groundnuts back, I knew that 1 groundnut times 5,000 people will die. So I had to reduce 25,000 people from my cooking budget. This is how I managed to cook sustainably. So coming back, in this story, the key importance is the concept of sustainability was there, and there were some metrics. So in the exposure draft also, you have a scope, you have governance, you have metrics, because ultimately the people, when they're reporting on sustainability, you need to have common metrics, and that's something which the sustainability standard will take into account. And hopefully, we can look at Yusuf Hassan eating the number of rotis he will have will be the number of standards IASB will issue next year. So please watch out. Okay. So coming to these standards, let's just look at what are the projects which they are going, and you don't have to memorize any of this, just be aware of the topics. What does ISB do is, they'll say, here are all the topics of interest which we have, and they'll consult. They'll come to you and they'll say, you know what, tell us for the next 5 years, what's of interest, what should we focus? Because if you recall, they issued so many standards, and now we are in some kind of a pause mode, because we want to settle, we want to make sure that we assimilate, and there has to be a certain level of stability. What does ISB want? They want transparency. In terms of capital markets, what is being looked at is public interest. They want to make sure that we come up with robust standards which are transparent, which are consistent, which can be widely adopted, and there is trust as far as the capital markets are concerned. That's the core objective. And when it comes to ISB, it will issue those standards relating to financial reporting standards which help you measure financial performance and operations. And when it comes to the sustainability standards, they will issue standards which help businesses look at their sustainability related risks and which enhance or erode shareholder value. And the objective is to come up with standards which are applicable, which can be adopted for the short term, medium term, as well as the long term. So that's the broad objective of the organization. So you have a list of projects, and out of this, from 2022 to 2027, the next 5 years, what are they going to focus on? Okay, they're going to focus on some of these projects. Intangible assets, what are they going to do? They're going, we have crypto now. Okay, you have intangible assets which are held for trading. So when the standards were looked at that point in time, they didn't consider some of these aspects, and they're saying, should we deal with cryptos in IS 38 or should it be a subject of another standard? So this is one of the things which they are debating. Similarly, in terms of statement of cash flows, what goes into financing activities, what goes into reporting activities, what goes into operating activities, non-cash disclosures. All of these elements are being looked at. Climate related items we spoke about. IASB and International Sustainability Board, they are both closely interlinked, because once you issue a sustainability related standard, it will have financial statement implications. So you have to go back and see how are you going to disclose it in your financial statements. So these changes are also there. Of course, it will be a narrow focus as far as IFRS is concerned, IASB is concerned, and the sustainability aspects will be covered by International Sustainability reporting standards. And then of course there are some projects in terms of operating segments, pollutant pricing mechanisms. So in terms of these credits, etc., how are you going to take into consideration? So this is just to give you a flavor of what's their pipeline for the next 5 years. What is relevant for you is 2022 most relevant, which we will cover, and 2023 what is coming up. So I'll try to spend more time on 2022. I've not been given a lot of time, so Krishnan, please warn me when we have 5 minutes left, okay? So what's applicable in 2022? Really the good news is there are only limited things which are going to affect you, okay? We have something in terms of property, plant and equipment. There's something in terms of onerous contracts, and then you have a few elements which might apply to you or might not apply to you. So coming to IAS 16, property, plant and equipment, and I'm sure many of us have studied this even in India. Expenditure during construction period, income during construction period. You remember back in your college days, you had read this concept. And what did we do? The standard says you capitalize it when an asset, intended asset is available for use in a way intended by management. And typically in petrochemical industries, in energy and resources, etc., it takes a little bit of time for a refinery to be there in a way intended by management, because you may not hit those levels in terms of capacity, etc. There will be some teething issues, for instance, in a refinery, which don't allow you to capitalize it. But meanwhile, you may be generating income. So what do we do with this income? So historically, the standard, there was ability for an entity to offset this income against the cost, against the asset itself, okay? But then they looked at it and they said, what, doesn't seem right. By doing that, what's happening is the carrying value of the asset is affected. So what they've said is that, they've changed it and they said that you can no longer offset this cost and income. If there is, during the construction period, any income, that goes to P&L. You have any expense, that goes to P&L. Okay? So that change is done, and the treatment is basically, it is retrospective, but of course, it is only limited to those assets which are put to use, available for use as at the earliest comparative period. So to that extent, you have relief. So just keep it in your mind, if you are or if you were, taking the income during the construction period and offsetting it against the asset, that can no longer be done. You need to treat it as period costs and income during a certain period. I don't think, again, it affects most of you, but it's only for those industries where you may have done that. Coming to the second topic, and this particularly has come more due to the application of coronavirus and due to let's say the war in Ukraine, where you have disruption in terms of supply chain and you have some issues. If you have a fixed income contract and you have a commitment to purchase something, okay, and if you believe that you're going to make a loss upfront, that I am going to sell an item to Neeraj Bhai, and I have agreed that I'll sell it at 100 dirhams, and I'm going to purchase it from Rajiv Bhai, and I'm going to purchase it at 110 dirhams. And upfront, I know for the next 2 years, I'm going to make a loss because I've committed to both sides. Okay? So that loss is something called an onerous arrangement. Okay? That onerous arrangement should be accounted for in accordance with the standard IAS 37. So you need to book that loss, although you're going to incur that loss in the coming future, because that contract is already committed to, you need to account for it. Now, the question was that what should I account for it? What type of cost should I consider? Should I consider only the purchase price of that contract with Rajiv? Should I consider any allocation of overheads which are related to the production activity? That question was there and people were not certain what to do. So they came up with clarity. They said the incremental cost of fulfilling this contract, any cost that directly relate to this contract, including allocated overhead, you need to take it into consideration. So all of a sudden, it is possible when you're looking at this arrangement, there could be some onerous elements, because previously you may have missed out a few elements. Now you need to consider those elements. So please, in your organization, if you have a fixed price contract or you have a long-term purchase agreement to purchase something, and due to the situation, if you feel that you're going to make a loss, and you have to look at this, you can't like combine things. You need to look at it from an obligation to obligation perspective. So that's pretty much the change relating to onerous contracts. IFRS 3, nothing to be too much concerned about. You are aware that when an acquisition happens, you have some contingent assets, you have some levies. You have to take care of this upfront. This only happens in an acquisition in the books of the acquirer. Okay, there was some disconnect between this and the framework. So when in 2018 the framework changed, the standard setters were a little bit afraid to just link IFRS 3 to the framework. They looked at it and all they have done is they've linked this back to the 2018 framework. That's all. The treatment continues to be the same, and when it comes to contingent assets, we still can't recognize it. It's only contingent liabilities and levies upon acquisition in the books of the acquirer. So again, nothing much for you to be aware of. It's just a linkage to a particular framework. Now coming to some other changes. Again, this largely doesn't affect most of you. I'll spend some time maybe in the 10% test, because that's something which may affect you. Subsidiary as a first time adopter, this is something relating to IAS 1. Since all of you are following IAS 1, this will not affect you. Lease incentives, I'll let my learned colleague Yusuf cover this, and there isn't any significant change, but he will cover this aspect. And then taxation in fair value measurements. I think just here all they have done is there was one example which was kind of clashing with the overall guidance, so they just removed that example which was anyway not binding. So that's it. When as it is, they issue a standard with so many things, and in that when they issue it, maybe there is some confusion, so or some inconsistency. All they're trying to do is to remove that inconsistency. Even in IAS 41 agriculture, it's a fair value standard, and they said you can do this pre-tax, but they had some guidance which was in the cash flows, it was pre-tax, whereas in the other guidance, the fair value need not be pre-tax, so they removed that particular element. Again, how many of us are following IAS 41? Not many, so it should not really affect us. So let's just spend some time on that IFRS 9 bit which may affect you. Okay, so I'll just go there, the 10% test. So what is this 10% test? You may go to your bank and you may renegotiate your interest rates, and then your auditor may come and tell you, you may have to de-recognize that instrument and recognize a new instrument. So you may have a situation like that. So, so what you typically do is you look at your cash flows, okay, your previous cash flows and your new cash flows. When you are looking at those new cash flows, you take into account the fees, okay, what you're going to pay to your bank. So what they have clarified is, previously you used to take, who all charge fees in such a transaction? The bank of course charges, but someone else may charge you fees there? Brokers, lawyers, okay. So they have just clarified that you can only consider bank fees. Don't include other people's fees for the 10% rule. That's it. Okay, nothing further. So just for this 10% test, what goes into that computation, they have just clarified. So I'm reminded I have 4 minutes left, so I'll try to wrap up within that. Taxation, as I mentioned, it's just to clarify this pre-tax cash flows. Now, this is the last slide of my presentation. Okay, so that's good news. I can see Krishnan already smiling. So what's coming up in 2023 and beyond? Okay, so one of the most important things which is coming in 2023 and beyond is IFRS 17, insurance contracts, which Mr. Aggarwal, Dr. Aggarwal rather, will cover it in detail. So that's something which I don't want to steal his thunder, so he will cover it, and that's quite pertinent to all of you. What other changes are coming up? IAS 1 IFRS on practice statement 2. You know, what do we typically disclose as accounting policies right now? We say significant accounting policies. Is significant defined anywhere in the standard? It's not defined. So what they're doing is, they've defined materiality now, okay? So what they're saying is, you have to disclose material accounting standards. One of the key challenges, and I went through 2 years back, we had a keynote address by Abbas Mirza, and he spoke about relevance, okay? We are including in the financial statements a lot of irrelevant information, so people are unable to really pick up what it is. So I expect as a result of this change, you know, material accounting standards means you will have to disclose more about the more relevant accounting policies and remove irrelevant ones from disclosure. So that's something relating to IAS 1. IAS 8, okay, what they have is just clarified, you know, change in accounting estimate versus change in accounting policy. And when it comes to change in accounting estimate, they have defined it as monetary amounts in the financial statements that are subject to measurement uncertainty. What is a change in accounting estimate? Your doubtful debts provision if it changes, useful life if it changes, those are estimation uncertainty. So that's something which they have clarified here. And IAS 12, you know, again, this is not a standard which is currently relevant, but as John said, some of you are going to become you know, tax experts and teachers, so I'm sure you'll be reading IAS 12, and you know, in limited situations, let's say we had, let's say a lease asset and a right of use, and you had a deferred tax asset as well as a deferred tax liability which you could previously offset. Now you don't have the ability, you need to show it gross. So that's a change, and my strong recommendation to all of you is to go through IAS 12, because you might have done this a long time ago. Corporate income tax is coming, and it's important for all of you to know that standard. I also request chairman of the chapter to maybe do a specific session on IAS 12, you know, because there are a lot of concepts there which our members need to refresh. So that broadly covers the changes which we have. I'm certain that you will have a number of questions over the course of today. If there's any for me, feel free to raise them. I know where I can redirect them, but happy to answer as well. Thank you very much for your time.
Thank you, Paddy, for your keynote speech and setting the tone for the rest of the session. Now, to honor Paddy, may I please request our chairman, John George, a senior member, Rakesh Seth, and past chairman, Rajiv Shah.